introduction to loan signing agent role. The role of a loan signing agent, LSA, is critical in the real estate and lending industries, serving as an impartial third party to ensure loan documents are signed, dated, and notarized correctly. LSAs are typically notary publics who have received specialized training to handle loan documents. They facilitate the final step in a borrower's loan process, ensuring all paperwork is executed accurately and efficiently. This specialization requires a keen eye for detail and a thorough understanding of various legal documents. The LSA acts as a crucial link between lenders, title companies, and borrowers, ensuring a smooth and compliant closing experience for all parties involved. Their expertise helps prevent costly errors and delays in real estate transactions, making them indispensable professionals. Becoming a certified LSA offers a flexible and rewarding career path for individuals seeking independence and professional growth. This role allows for setting one's own schedule and working with diverse clients, providing a dynamic work environment. The demand for qualified LSAs remains consistently high, driven by the continuous activity in the real estate market. With proper training and certification, individuals can establish a reputable business and contribute significantly to the financial sector. This course will equip you with the knowledge and skills necessary to excel in this specialized field, covering everything from foundational notary principles to advanced signing procedures. Understanding the notary public foundation. At its core, the loan signing agent role is built upon the foundation of being a notary public. A notary public is a public officer appointed by a state government to witness the signing of important documents and administer oaths and affirmations. The primary purpose of a notary is to deter fraud and ensure the authenticity of signatures on legal documents. This public trust position requires adherence to strict ethical guidelines and legal statutes. Understanding the fundamental responsibilities and limitations of a notary public is paramount for any aspiring LSA. It forms the bedrock of credibility and legality for all subsequent loan signing activities, ensuring that every notarized document holds legal weight and is beyond reproach. The powers and duties of a notary public are defined by state law, which means there can be variations in requirements and procedures across different jurisdictions. Common duties include verifying the identity of the signer, ensuring the signer understands the document, and confirming that the signer is signing willingly. Notaries must maintain an official journal of all notarial acts, which serves as a crucial record for legal and auditing purposes. They must also use an official seal or stamp to authenticate their notarial acts. Adhering to these foundational principles ensures the integrity of the notarization process and protects both the public and the notary from potential legal issues, making meticulous attention to detail a vital skill. Requirements for becoming a notary. Becoming a notary public involves meeting specific state-mandated requirements, which typically include age, residency, and a clean criminal record. Most states require applicants to be at least 18 years old and a legal resident of the state where they are applying. A background check is almost always a prerequisite to ensure the applicant's trustworthiness and integrity, as the role involves handling sensitive legal documents. Some states may also require applicants to pass an exam to demonstrate their understanding of notary laws and procedures. It is crucial to consult your specific state's Secretary of State website or equivalent authority for the exact requirements, as these can vary significantly and are subject to change. Fulfilling these initial requirements is the first critical step toward becoming a certified loan signing agent. Beyond the basic eligibility criteria, the application process usually involves submitting a formal application, paying a filing fee, and obtaining a surety bond. A surety bond is a type of insurance that protects the public from financial harm caused by a notary's negligence or misconduct. The bond amount varies by state, but as a mandatory component of the appointment process. After approval, a newly appointed notary must often take an oath of office and file their commission with the county clerk. Finally, obtaining the necessary notary supplies, such as an official seal and a record journal, completes the process, enabling the individual to perform notarial acts legally and professionally. Each step ensures public trust and accountability in the notary's duties. The loan signing agent certification process. While being a notary public is a prerequisite, becoming a certified loan signing agent requires additional specialized training and certification. This specialized training focuses on the intricacies of loan documents, the specific procedures involved in a loan signing, and the ethical considerations unique to this field. Certification programs are offered by various reputable organizations, often involving coursework, practice exams, and a final certification exam. These programs ensure that LSAs possess the specific knowledge needed to guide borrowers through complex loan packages accurately and compliantly. Investing in a quality certification program is crucial for gaining the necessary expertise and credibility in the industry, distinguishing a general notary from a specialized loan signing professional. The certification process typically covers a wide range of topics, including identifying different types of loan documents, understanding their purpose, and knowing how to present them to borrowers. It also emphasizes the importance of maintaining impartiality, avoiding the unauthorized practice of law, and adhering to strict privacy regulations. Upon successful completion of the training and passing the certification exam, individuals receive their LSA certification, which is often recognized by title companies and lenders. This certification signifies a commitment to professional standards and provides clients with confidence in the LSA's abilities. It opens doors to a specialized niche within the notary profession, offering enhanced earning potential and career opportunities. Essential tools and equipment. To perform their duties effectively, loan signing agents require a specific set of tools and equipment. Foremost among these is a reliable notary stamp or seal, which must meet state specifications and be securely stored. A high-quality notary journal is also indispensable for meticulously recording every notarial act, as required by law. This journal serves as a vital legal record and protection for the notary. Other essential items include a professional printer, capable of handling large loan packages, often requiring dual tray functionality for legal and letter-sized paper, and a scanner for returning signed documents electronically. These tools form the backbone of an LSA's operational efficiency, ensuring accuracy and compliance in every signing. Beyond the core notary supplies, LSAs also need a dependable computer and internet access for receiving and sending documents, as well as for communication. A secure mobile hotspot can be invaluable for signings conducted off-site, where internet access might be unreliable. Professional attire is also a crucial tool, as it conveys professionalism and builds trust with clients. Additionally, a sturdy briefcase or carrying case helps organize and transport documents securely. Investing in quality equipment is not merely a convenience, it is a professional necessity that reflects competence and reliability, ultimately contributing to a successful and reputable loan signing business. Having the right tools ensures preparedness for any signing scenario. Types of loan documents. Overview. Loan packages are comprehensive sets of documents that borrowers sign when obtaining a mortgage or other types of loans. These packages can range from 50 to over 200 pages, each serving a specific legal and financial purpose. Understanding the different categories of documents within a loan package is essential for an LSA. Generally, documents can be broadly categorized into federal disclosures, state-specific disclosures, lender-specific forms, and title escrow documents. Each category contains critical information that borrowers need to understand, and LSAs are responsible for presenting them clearly without providing legal advice. Familiarity with these overarching categories helps LSAs navigate complex packages efficiently and confidently, ensuring all required forms are properly executed. Within these categories, documents vary based on the type of loan, such as purchase loans, refinances, or reverse mortgages. For example, a purchase loan package will include documents related to the sale of the property, while a refinance package will focus on the new loan terms and the payoff of the old loan. Reverse mortgages have unique disclosures tailored to their specific structure. LSAs must be proficient in identifying these variations and understanding the purpose of each document within its context. This foundational knowledge allows the LSA to effectively guide the borrower through the signing process, ensuring all questions are addressed appropriately and that the signing is completed without error. Mastering this overview is key to becoming a versatile and competent loan signing agent. Key loan documents. Promissory note. The promissory note is arguably one of the most critical documents in any loan package, as it represents the borrower's promise to repay the loan. This legally binding document outlines the terms of the loan, including the principal amount, interest rate, payment schedule, and maturity date. It specifies the borrower's obligation to the lender and details the consequences of default. LSAs must ensure the borrower understands these fundamental terms and correctly signs and dates the promissory note. While LSAs cannot explain legal implications, they can point out where these key terms are located within the document. This document is a cornerstone of the entire loan agreement, making its accurate execution non-negotiable for both parties. Often, the promissory note will also include clauses related to late payment penalties, prepayment options, and acceleration clauses. An acceleration clause, for instance, allows the lender to demand immediate repayment of the entire outstanding balance if certain conditions, such as default, are met. It is imperative that the LSA ensures the borrower reviews these sections carefully. The LSA's role is to facilitate the signing process by ensuring all fields are completed and signatures are obtained in the correct places, not to interpret the legal language. Guiding the borrower to review these specific clauses empowers them to make informed decisions about their financial commitment, reinforcing the LSA's role as a meticulous facilitator. Key loan documents. Deed of trust mortgage. The deed of trust or mortgage is another foundational document in a loan package, serving to secure the promissory note by placing a lien on the borrower's property. While the promissory note outlines the promise to repay, the deed of trust or mortgage gives the lender the right to foreclose on the property if the borrower defaults on the loan. The specific document used, either a deed of trust or a mortgage, depends on the state's legal framework. LSAs must ensure that the property address, legal description, and borrowers' names are accurately recorded in this document. This instrument is recorded with the county recorder's office, establishing the lender's security interest in the property. Its correct execution is vital for the lender's protection and the legality of the entire transaction. Key elements within the deed of trust or mortgage include the legal description of the property, the names of the borrowers and lender, and clauses related to property maintenance, insurance, and taxes. It also typically includes a power of sale clause in a deed of trust, allowing for non-judicial foreclosure in some states or judicial foreclosure procedures in a mortgage. LSAs are responsible for ensuring all parties sign and date this document correctly, particularly in the presence of witnesses if required by state law. While LSAs do not explain the legal ramifications, they must ensure the document is presented and executed flawlessly, highlighting the importance of each signature and date. This diligence safeguards the interests of both the borrower and the lender. Key loan documents. Closing disclosure. The closing disclosure, CD, is a 5-page federal form that provides final details about the mortgage loan selected. It itemizes all costs associated with the mortgage transaction, including loan terms, projected payments, and the costs to close the loan. Borrowers must receive this document at least 3 business days before closing, allowing them time to review and compare it with their loan estimate. LSAs are responsible for presenting the CD and ensuring the borrower acknowledges receipt and signs where required. While LSAs cannot explain the financial implications or offer advice, they must ensure the borrower has the opportunity to review it thoroughly. This document is crucial for consumer protection, promoting transparency in lending practices, and preventing last-minute surprises for the borrower. The CD details various fees, such as origination fees, appraisal fees, title insurance premiums, and recording fees. It clearly distinguishes between costs the borrower pays and costs the seller pays, if applicable. It also includes sections for cash to close, summarizing the total amount the borrower needs to bring to the closing. LSAs should guide borrowers to review the loan terms and cash to close sections carefully, ensuring they understand these critical figures. The LSA's role is to facilitate the signing, not to interpret the numbers or offer financial advice. Ensuring the CD is properly signed and dated confirms the borrower's acceptance of the final loan terms and closing costs, marking a significant step towards loan completion. Key loan documents. Truth in Lending Disclosure. The Truth in Lending Disclosure, TIL, disclosure, is a federal regulation designed to protect consumers in credit transactions by requiring clear disclosure of key terms. While much of its information is now integrated into the closing disclosure for most mortgage loans, it remains a crucial concept for LSAs to understand, particularly for certain types of loans not covered by the TILA RESPA Integrated Disclosure, TRID, rule. The TIL disclosure focuses on the cost of credit, expressed as an annual percentage rate, APR, and the total finance charge. It ensures borrowers are fully aware of the true cost of borrowing money over the life of the loan. LSAs must be familiar with its purpose and ensure it is properly presented and signed when it appears in a loan package. Key components of the TIL disclosure include the APR, finance charge, amount financed, and total of payments. The APR represents the true annual cost of a loan, including interest and certain other fees, providing a standardized way for consumers to compare different loan offers. The finance charge is the total dollar amount the loan will cost the borrower. LSAs must ensure the borrower acknowledges receipt of this disclosure and signs it where indicated. Although LSAs do not interpret the financial figures, they play a vital role in ensuring this consumer protection document is properly executed. Understanding the TIL disclosure reinforces the LSA's commitment to facilitating transparent and compliant loan signings, safeguarding consumer interests. Key loan documents. Notice of Right to Cancel. The Notice of Right to Cancel, NRC, is a crucial consumer protection document that grants borrowers a 3-business-day right to rescind certain types of credit transactions. This right primarily applies to refinance transactions where the loan is secured by the borrower's primary residence. It does not typically apply to purchase loans or loans secured by secondary homes. The purpose of the NRC is to give borrowers a cooling-off period, allowing them to reconsider their decision without penalty. LSAs must ensure that each borrower receives 2 copies of the NRC and signs and dates 1 copy, acknowledging receipt. This document is paramount for protecting consumer rights and preventing rushed decisions in significant financial transactions. The 3-business-day rescission period begins after all 3 events have occurred: the signing of the loan documents, the delivery of the closing disclosure, and the delivery of the Notice of Right to Cancel. If any of these events occur on different days, the rescission period starts on the last day. LSAs must clearly explain the existence of this right and ensure the borrower understands how to exercise it without providing legal advice on whether they should cancel. The LSA's role is to facilitate the proper execution and delivery of this notice, ensuring compliance with federal regulations. Accurate handling of the NRC is vital for avoiding potential legal issues and ensuring the borrower's rights are fully protected throughout the loan process. Understanding the loan package flow. Navigating a loan package effectively requires understanding the logical flow and order of the documents. While there isn't one universal order, most loan packages follow a general sequence designed to guide the borrower through the transaction logically. Typically, the package begins with federal and state disclosures, followed by the promissory note and deed of trust, mortgage, then lender-specific forms, and finally, title and escrow documents. LSAs should familiarize themselves with common sequencing patterns provided by title companies and lenders. This understanding allows for a more organized and efficient signing appointment, reducing confusion for the borrower and minimizing errors. A well-prepared LSA can smoothly transition from one document to the next, maintaining a professional and reassuring presence. Before any signing appointment, a certified LSA should always perform a thorough document review or mock signing of the entire package. This involves going through each page, identifying all signature lines, initials, dates, and notarization points. This pre-signing preparation helps the LSA anticipate any potential questions or issues and ensures they know exactly where to direct the borrower's attention. It also allows the LSA to identify any missing pages or discrepancies before the actual appointment, preventing delays. Mastering the loan package flow and conducting meticulous pre-reviews are hallmarks of a highly competent LSA, ensuring every signing is executed with precision and confidence. This proactive approach is key to delivering exceptional service. Preparing for a loan signing appointment. Thorough preparation is the cornerstone of a successful loan signing appointment. This begins long before meeting the borrower, starting with receiving the loan package from the title company or lender. LSAs must review the instructions carefully, noting any specific requirements for the signing, such as witness requirements or special handling instructions. Printing the documents correctly is paramount, often requiring a dual tray printer for legal and letter-sized paper, ensuring all pages are legible and in the correct order. Additionally, confirming the appointment time, location, and borrower's contact information is essential. This meticulous pre-appointment checklist minimizes surprises and ensures a smooth start to the signing process, reflecting professionalism and attention to detail. Beyond document preparation, LSAs should also prepare their notary supplies, ensuring their stamp is clean and functional, and their journal is ready for entries. It is also wise to have extra pens, paper clips, and sticky notes on hand. Confirming the borrower's identification requirements, such as acceptable forms of ID, is another critical step. LSAs should also plan their travel route, allowing ample time to arrive punctually and account for potential traffic or unforeseen delays. A well-prepared LSA projects confidence and competence, which helps put borrowers at ease during what can be a stressful process. This level of readiness is a key differentiator for successful loan signing agents, ensuring every appointment is handled with utmost efficiency and care. Conducting the loan signing. Best practices. Conducting a loan signing appointment requires a blend of professionalism, efficiency, and strict adherence to protocol. Upon arrival, the LSA should greet the borrower warmly and establish a comfortable, professional atmosphere. The first step is always to verify the borrower's identity using acceptable forms of identification, ensuring it matches the names on the loan documents. The LSA should then present the documents in a clear, organized manner, guiding the borrower through each one without offering legal advice or interpreting terms. Maintaining impartiality throughout the process is paramount, as the LSA's role is to facilitate, not to advise. These initial steps set the tone for a smooth and compliant signing, building trust and confidence with the borrower. During the signing, the LSA must ensure all signature lines, initial boxes, and date fields are completed correctly. For notarized documents, the LSA must witness the signature and complete the notarial certificate accurately, including stamping and recording the act in their journal. It is crucial to allow the borrower ample time to read and ask questions about each document, directing them to the lender or title company for explanations of terms. The LSA should remain patient and attentive, providing a supportive environment. After all documents are signed and notarized, the LSA must perform a final review to catch any missed signatures or errors. Adhering to these best practices ensures a legally sound and positive experience for all parties involved, solidifying the LSA's reputation for excellence. Identifying signers and verifying IDs. One of the most critical responsibilities of a loan signing agent and a notary public in general is accurately identifying the signer. This process is fundamental to preventing fraud and ensuring the integrity of the notarized documents. LSAs must require signers to present acceptable forms of identification, which typically include a state-issued driver's license or identification card, a U.S. passport, or a military ID. The identification must be current, unexpired, and contain a photograph, physical description, and signature of the bearer. It is imperative that the LSA carefully compares the photo on the ID with the person in front of them, and the signature on the ID with the signature being made on the documents. This meticulous verification process is a non-negotiable step in every signing. Beyond visual comparison, LSAs must also examine the ID for any signs of tampering or alteration. They should feel for raised edges, check for holograms or security features, and ensure the information is consistent. If there are any doubts about the identity of the signer or the authenticity of the ID, the LSA must refuse to perform the notarial act. It is always better to err on the side of caution than to risk facilitating a fraudulent transaction. Some states allow for identification based on the credible identifying witness method, but this is a secondary option and requires specific procedures. Thorough identification practices protect the LSA, the lender, and the public, reinforcing the LSA's role as a guardian against fraud and ensuring the legal validity of all documents. Notarizing documents correctly. Correctly notarizing documents is a fundamental skill for any loan signing agent. This involves several precise steps, beginning with ensuring the notarial certificate is properly completed. The certificate, which is typically pre-printed on loan documents, must accurately reflect the type of notarial act performed, such as an acknowledgement or a jurat. The LSA must fill in all blanks, including the date of notarization, the county and state where the act occurred, and the names of the signers. Any errors or omissions in the notarial certificate can invalidate the entire notarization, leading to delays and potential legal issues. Meticulous attention to these details is crucial for maintaining the legal integrity of the documents. After completing the certificate, the LSA must apply their official notary stamp or seal clearly and completely, ensuring it does not obscure any text or signatures on the document. The stamp must be legible and contain all required information, such as the notary's name, commission number, and expiration date. Finally, the LSA must sign the notarial certificate with their official signature, exactly as it appears on their commission. Every notarial act must then be recorded in the notary's official journal, detailing the date, type of act, document title, signer's name, and method of identification. This comprehensive record keeping is a legal requirement and provides a vital audit trail. Adhering to these strict procedures ensures that every notarization is legally sound and protects all parties involved in the loan transaction. Handling common signing scenarios. Loan signing agents frequently encounter various scenarios that require adaptability and problem-solving skills. One common situation involves multiple signers, such as married couples or co-borrowers, where each individual must be properly identified and sign all relevant documents. Another scenario might be a signer who is hesitant or has many questions. The LSA must patiently guide them through the documents, pointing to relevant sections, but always deferring legal or financial advice to the lender or title company. LSAs also need to be prepared for last-minute changes to documents, requiring clear communication with the contracting company for instructions. Handling these situations calmly and professionally is key to a successful signing, demonstrating the LSA's expertise and composure under pressure. Other scenarios include signers who are physically unable to sign, requiring specific procedures for signature by mark or by proxy, always adhering strictly to state laws. Foreign language speakers may also present challenges, necessitating the use of an impartial translator if allowed by state law, but never relying on the LSA's own translation unless they are also a certified translator. Occasionally, a signer may refuse to sign a document. In such cases, the LSA must remain neutral, document the refusal in their journal, and inform the contracting company without offering persuasion. Being prepared for these diverse situations, understanding the legal boundaries, and maintaining professionalism ensures that the LSA can navigate any signing appointment effectively and compliantly, upholding the integrity of the process. Post-signing procedures and document return. The LSA's responsibilities do not end once the last document is signed. Post-signing procedures are equally critical to ensure the loan package is successfully closed. The immediate next step is a thorough final review of the entire package to confirm that all signatures, initials, dates, and notarizations are complete and accurate. Any missed spots or errors must be corrected immediately, if possible, before leaving the signing location. This meticulous review prevents funding delays and costly reschedules. The LSA must then organize the documents according to the instructions provided by the title company or lender, which often involves separating borrower copies from lender copies and preparing them for return. This organizational step is vital for efficient processing by the receiving parties. Returning the documents promptly and securely is paramount. Most companies provide specific instructions for document return, which may include overnight shipping via FedEx or UPS, or scanning and uploading documents electronically. LSAs must adhere strictly to these instructions and deadlines, as delays can impact the loan's funding. When shipping, it is crucial to obtain tracking numbers and retain proof of shipment. For electronic returns, ensuring high-quality scans and secure transmission is essential. Finally, the LSA must update their records, including their notary journal and personal business logs, to reflect the completion of the signing. Efficient post-signing procedures are a hallmark of a professional LSA, ensuring a seamless conclusion to the loan transaction and building a reputation for reliability and accuracy. Marketing your loan signing business. Building a successful loan signing business requires effective marketing strategies to attract clients. Networking is a powerful tool. Attending local real estate, title, and lending industry events can help LSAs connect with potential clients and build relationships. Creating a professional online presence is also crucial, including a dedicated website or a strong profile on professional platforms that highlight services, experience, and certifications. Optimizing online listings for local search engines ensures that title companies and lenders can easily find your services when needed. Consistent outreach and follow-up are essential for converting leads into long-term clients, establishing a steady stream of business. These proactive marketing efforts are vital for establishing a strong foothold in the competitive loan signing market. Word-of-mouth referrals are invaluable in this industry, so providing exceptional service at every signing is the best marketing tool. Encouraging satisfied clients to leave positive reviews on your online profiles can significantly boost your credibility and attract new business. Developing a professional brand, including a memorable logo and consistent messaging, helps differentiate your services. Consider creating a simple brochure or business card to leave with title companies and real estate agents. Offering competitive pricing and demonstrating reliability further strengthens your market position. By combining excellent service with strategic marketing, LSAs can build a robust and sustainable business, ensuring a consistent flow of signing appointments and a strong professional reputation. Setting your fees and invoicing. Determining appropriate fees for loan signing services is a critical business decision that impacts profitability and competitiveness. LSAs typically charge a flat fee per signing, which can vary based on factors such as the type of loan, the number of pages, travel distance, and the time of day, e.g., evening or weekend signings may command higher rates. Researching local market rates and understanding the value of your specialized services are essential for setting fair and profitable fees. It's important to factor in all operational costs, including printing, travel, notary supplies, and E&O insurance, when calculating your rates. Clearly communicating your fee structure upfront prevents misunderstandings and ensures transparency with clients, establishing professional expectations for your services. Efficient invoicing practices are crucial for timely payment and maintaining healthy cash flow. LSAs should use professional invoicing software or templates that clearly itemize services rendered, including the date of signing, borrower's name, type of loan, and the agreed-upon fee. Invoices should be submitted promptly after the signing is completed, adhering to the client's preferred billing cycle. Following up on overdue invoices politely but persistently is also important for managing accounts receivable. Maintaining accurate records of all invoices and payments is vital for tax purposes and financial management. By mastering fee setting and invoicing, LSAs can ensure their business remains financially stable and profitable, allowing them to focus on delivering high-quality signing services. Compliance and ethical considerations. Operating as a certified loan signing agent demands unwavering adherence to compliance regulations and a strong ethical framework. LSAs must strictly follow all state notary laws, federal regulations like the Real Estate Settlement Procedures Act, RESPA, and the Truth in Lending Act, TILA, and any specific guidelines provided by the contracting title company or lender. Compliance ensures the legality and validity of every notarial act and loan transaction. Ethical conduct is equally important, requiring impartiality, honesty, and confidentiality in all interactions. LSAs must never offer legal or financial advice, as this constitutes the unauthorized practice of law. Maintaining a reputation for integrity and trustworthiness is paramount, as the LSA holds a position of public trust. Confidentiality is a cornerstone of ethical practice for LSAs, as they handle highly sensitive personal and financial information. Protecting borrower data from unauthorized access or disclosure is a legal and ethical imperative. This includes securing physical documents, using encrypted communication channels, and properly disposing of sensitive materials. LSAs must also avoid conflicts of interest, ensuring their impartiality is never compromised. Any situation that could create a perceived conflict should be disclosed, and if necessary, the LSA should decline the assignment. Continuous education on evolving regulations and ethical standards is vital for maintaining compliance and upholding professional integrity, safeguarding both the LSA and the public from potential harm. Avoiding unauthorized practice of law. A critical ethical and legal boundary for loan signing agents is to strictly avoid the unauthorized practice of law, UPL. As notary publics, LSAs are ministerial officers, meaning they perform specific, authorized acts without exercising legal judgment or offering legal advice. Explaining the meaning or legal effect of any document, advising a signer on which documents to sign, or suggesting changes to loan terms all constitute UPL. LSAs must understand their role is to facilitate the signing process by identifying documents, pointing to signature lines, and completing notarial certificates. Crossing this line can lead to severe penalties, including fines, loss of commission, and even criminal charges. Maintaining a clear distinction between facilitation and legal advice is paramount for professional longevity. When a borrower asks a question about the legal implications or specific terms of a document, the LSA's appropriate response is to direct them to the lender, title company, or their own legal counsel. It is acceptable to point to the section of the document where the information is located, but never to interpret or explain it. LSAs should also refrain from preparing legal documents or selecting the type of notarial act, as these are responsibilities of legal professionals. Continuous training and a thorough understanding of state notary laws help LSAs navigate these boundaries effectively. By consistently adhering to their defined role, LSAs protect themselves from legal liability and uphold the integrity of both the notary profession and the legal system, ensuring a compliant and ethical service delivery. Record keeping and journal entries. Meticulous record keeping is a mandatory and indispensable practice for every notary public and loan signing agent. State laws universally require notaries to maintain an official journal of all notarial acts performed. This journal serves as a vital legal record, providing an audit trail for every notarization and protecting the notary from potential liability. Each entry must include specific details: the date and time of the act, the type of notarial act, e.g., acknowledgement, jurat, the title or type of document, the name and signature of the signer, and the method of identification used. Additionally, the fee charged for the service should be recorded. Consistent and accurate journal entries are non-negotiable for compliance and professional accountability. Beyond the official notary journal, LSAs should also maintain separate business records for financial tracking and client management. This includes logs of all signing appointments, invoices issued, payments received, and mileage for tax purposes. Digital record-keeping systems can be highly efficient for managing these business aspects, provided they are secure and regularly backed up. The notary journal, however, must typically be a physical, bound book, as specified by state law, and securely stored when not in use. Proper record-keeping not only ensures compliance with legal requirements, but also provides valuable data for business analysis and growth. It is a testament to the LSA's professionalism and commitment to transparency, safeguarding their business and reputation. Errors and omissions, E&O insurance. Errors and omissions, E&O insurance, is a crucial protection for loan signing agents, safeguarding them against claims of negligence or mistakes made during the course of their professional duties. While not always legally mandated by the state for notary publics, it is almost universally required by title companies and lenders who contract LSAs. This insurance covers legal defense costs and damages that may arise from errors, such as missed signatures, incorrect notarizations, or failure to follow instructions, which could lead to financial loss for the client. Investing in a robust E&O policy is a non-negotiable aspect of operating a professional loan signing business, providing peace of mind and demonstrating a commitment to professional responsibility. It protects the LSA's personal assets from potential lawsuits. The coverage amount for E&O insurance can vary, but most title companies require LSAs to carry at least $25,000 to $100,000 in coverage. It is advisable to choose a policy that specifically covers loan signing activities, not just general notary acts. LSAs should carefully review their policy to understand its scope, exclusions, and deductible. Renewing the policy annually and ensuring continuous coverage is also vital. In the event of a claim, the LSA should immediately notify their insurance provider and the contracting company. E&O insurance is an essential investment that protects the LSA's business and reputation, allowing them to perform their duties with confidence, knowing they are adequately protected against unforeseen professional liabilities. It is a mark of a truly professional and responsible loan signing agent. Continuing education and professional development. The legal and financial landscapes are constantly evolving, making continuing education and professional development indispensable for certified loan signing agents. Staying current with changes in state notary laws, federal lending regulations, like TRID updates, and industry best practices is crucial for maintaining compliance and competence. Many states require notary publics to complete continuing education courses for commission renewal. Beyond mandatory requirements, proactive learning through webinars, industry conferences, and specialized workshops helps LSAs refine their skills and expand their knowledge base. This commitment to ongoing learning ensures that LSAs remain experts in their field, capable of handling the latest document types and procedural changes with confidence and accuracy. Professional development also involves seeking out advanced training in specific areas, such as reverse mortgages, commercial loans, or electronic notarization, RON. Acquiring these specialized skills can open up new market opportunities and increase earning potential. Engaging with professional associations for notary publics and loan signing agents provides valuable networking opportunities, access to resources, and a platform for sharing experiences. Participating in online forums and communities dedicated to LSAs can also offer peer support and practical advice. A commitment to continuous learning and professional growth is a hallmark of a successful LSA, ensuring they remain competitive, adaptable, and highly valued in the dynamic real estate and lending industries. It is an investment in a long-term, thriving career. Building a successful career as a certified loan signing agent requires more than just technical skills. It demands a strong entrepreneurial spirit and strategic business planning. This involves defining your target market, whether it's local title companies, national signing services, or direct lenders. Developing a clear business plan that outlines your services, pricing, marketing strategies, and financial projections is crucial. Cultivating strong relationships with clients through exceptional service, reliability, and clear communication is paramount for repeat business and referrals. A proactive approach to seeking out new opportunities and continuously refining your business model will drive long-term success. This entrepreneurial mindset transforms a notary role into a thriving independent business, offering significant professional and financial rewards. Longevity in the loan signing industry is achieved through consistent professionalism, adaptability, and a commitment to continuous improvement. Regularly evaluate your services, seek feedback from clients, and adjust your strategies based on market demands and industry changes. Diversifying your services, such as offering general notary work or specialized notarizations, can also create additional revenue streams. Investing in professional tools, maintaining robust E&O insurance, and staying current with all legal and ethical requirements are ongoing commitments. By embracing these principles, loan signing agents can build a reputable brand, establish a loyal client base, and secure a fulfilling and prosperous career in this essential segment of the real estate and lending industries. Your dedication to excellence will be the ultimate determinant of your success.